Hey everybody, welcome back to Assisted Living Investing. It's Brandon Gustafson. Happy to have you back here on the channel. Last time we went through the quick and easy version of the calculator that I had on our tutorial. I wanted to kind of jump into more of the in-depth version of the calculator today. Make sure you like, comment, subscribe to the channel, ring that bell so you get notified every time I put some content up here. Join the conversation on Facebook and follow on Instagram and Twitter. So you make sure you're notified every time there's a new video that drops. And then if you just only have time for just the quick short versions of this, follow me on TikTok. I'm putting out videos out there on a weekly, or actually on a daily basis, trying to make sure you have all the content that you need so that you can be productive as you're trying to find and purchase an assisted living facility. So today, before we jump into the video and the tutorial, I wanted to go through another few definitions for you. Make sure you understand a few of the other items that we're going to be talking about today as we go through the content and the calculator. So number one is the P&L. So what is a P&L? I've talked about that a few times in my videos. P&L stands for profit and loss. It's a financial statement that the seller will provide to you after you sign the NDA with them. The P&L is going to show you all of the income, expenses, that the seller has for the past few years, and they're often the documents that the seller will send to their accountant when they're getting ready to prepare their taxes. So this is something that might be done in QuickBooks or something like that. So these are the financial statements of the facility, and it's going to be very helpful as you're trying to put in your information in the calculator, trying to do underwriting on a deal. NDA, I know we've talked about this before, but NDA stands for a non-disclosure agreement. So it's basically a legal form that allows you to share information, sensitive information, back and forth with each other. So, it could be your social security number, it's their taxes, things like that. So you're able to share that information back and forth. That's what the NDA is, what it allows you to do. Add backs. I talked about add backs a little bit in the last video, but an add back is a line item in the P&L that doesn't apply to you. So you're going to kind of take it out of your analysis. So let's say that the seller has purchased a vehicle and they're expensing that vehicle in their P&L, but you don't plan on having a vehicle. So you would take that line item that says vehicle, you would take it out of your analysis and you would add it back in as something that is not an expense. So you just are basically nullifying that line item. You still want to have it as you're looking at things to see kind of what they looked at and what they use as their expenses, but it's good to be aware of what those are so that you can take them out and add it back, because it's going to have a positive impact on you and what you're trying to do with your underwriting. There's also going to be a few terms in here. I have the calculator built so you could try to use it when you're putting together a syndication. So that's kind of bringing a group of people together to do a deal. I haven't tested it out too much on there, but I do have it built that way. So if it's something that you're interested in learning more about, I would love to have a conversation with you. Comment down below if you have insight into how things work with that as well. I think that would be awesome. I'd love to kind of start building partnerships that way. But there's going to be a couple terms in there. One is GP, and that stands for general partner. So general partner, in the case of this calculator, also counts for if you're doing a joint venture with somebody. So what you would do there is just kind of zero out the LP version of this, the limited partner, and then you just count your general partners as the joint people. So if you have 2 or 3 people in a joint venture, then you would just kind of put that GP count at 2 or 3, put that at 100%. We'll get into that here in the calculator, but that's kind of how you would do that. But they are the people, they're guarantors on the loan. They're going to be liable in the event that the loan defaults or something like that. Like they are the people that are on the paperwork. You as a joint venture or a single entity, a single sole proprietor are also kind of in that same boat as a general partner. There's more complexities to put that as a simplified version. That's what it is. The LP is limited partners. So those are people in a syndication that are giving you money for the deal. Oftentimes they are not listed as a guarantor unless they have a large net worth, or there are certain situations where they would be listed as a guarantor on a loan. But in most cases, they're not going to be. They're just going to be a person that kind of gives you money so that you can then purchase a facility. So that's what an LP is. In this calculator, they're just kind of considered a passive investor, somebody that doesn't really have much say or anything in how the facility is run, but they've given you money and they just want to be a passive investor. They don't want to be involved with the day-to-day work that's going on in a facility. The other definition is rent roll. So rent roll is a census for a facility for all the residents that are there, and it often will like include a room number. Sometimes it will have a resident name. Sometimes they'll block that out. They just want to keep that sensitive information to themselves, which is totally fine. They just might say room A, resident 1, or room 1, resident A, or whatever. They might just do that to kind of hide it, but it still gives you a really good idea of what it looks like. It can give you what the pay rate is. It can give you if it's vacant or occupied. They can tell you if it's private pay versus Medicaid, and kind of get you that information. A rent roll is extremely important. I would highly encourage you to pursue getting that information from a seller. It's going to make or break your deal. Like, you need to have a really solid understanding of what that looks like, but that's what a rent roll is. So that's a question that you definitely want to ask when you're asking a seller for their information. When you're getting the P&Ls and everything, make sure you get a rent roll. So we're going to jump into the calculator. I'm going to go through this one a little bit more quickly, I think, than I did last time. It's at a little bit of a higher level. And it has a lot of information. I can't go super in depth with this like I did in the last video, but I do want to make sure that you have a good understanding of it. I'm going to move some of these things around while I'm talking, but we are going to start here at the past financials tab. So in here, this is where you're going to grab the past financials from the seller. So you're going to put in over here, we'll scroll over. So you've got the different expenses that are going to go in here. So they're going to give you line items, and I can't remember, these numbers are from an actual facility. I can't remember which one it was or how big it was, but it just kind of gives you an idea. And then I put in here, this was a construction related add back. So I have highlighted these. And then over here, I've got this is the income. So any income that's coming in could come from rent. You could even separate it out by Medicaid and private pay if you wanted to. Sometimes you offer extra services, and so you're going to put that in here, but that's where the income section lives. And then down here, this is where you're going to put in different add backs. So over here, we've highlighted which ones are add backs, and then I will go in and I will make formulas that go in and pull it in. So I will it's what's called a VLOOKUP. I'm not going to get too deep into it. You could find a quick YouTube video on what it looks like. But as long as this name is the exact same as this one, you can do what's called a VLOOKUP. And then you can say, I want to go and grab all the charitable contributions from over here, and I need it to match up with the corresponding year, and it will just kind of pull that information in here. It's just a faster way to do it rather than going and saying charitable contributions. I got to go find it. I'm going to throw it back over here and put 300 in. Comment down below if you want me to make a video on kind of that part of analytics and how VLOOKUPs work and how you can kind of create efficiencies as you're working through different things in Excel or in Google Sheets, just to make your analysis go a little bit more quickly. But right here, we've got all of these add backs that are coming over from this expense side. So this $390,000 worth of add backs. And then down here, this is the EBITDA. So that is, I can't remember exactly what it stands for, but it's basically saying this is the expenses before interest, taxes, and then it's also like adding back in all of these add backs in there as well. So it's kind of like the normalized NOI that we talked about in our last video. So you're going to take all your expenses, you're going to take your income here, and these are the add backs. And so this is that number that is looking at, let's see, V43, that's going to go over and grab this number right here, which is that original net ordinary income number, and it's adding in these total add backs right there. Okay, so it's giving you that number right there, and then these are any other adjustments that you need to put in there. So this is the management fee that we were talking about last time. If you're putting in replacement reserves for the units, so this is, if you have late rent or something like that, that's where you would kind of create reserves for that, and you just want to kind of have that in there. And then property tax, sometimes people list property tax over here, sometimes they won't. So you just want to kind of watch where you're putting in the property tax, make sure you're accounting for it, because taxes are expensive. So you want to make sure that's in there. So these are the total other adjustments. So that is all of these numbers that we put in there. Okay. And then down here is the EBITDA. So this is now these two numbers. So it's taking this one which is all of those expenses. And then we're minusing, again, these other adjustments. So these are going to be extra expenses. So these were all of the expenses that existed. These are adding back expenses that you're not going to have. These are adding in expenses that you do expect to have. Okay, so and then from there, a lot of these numbers over here are actually going to feed this section over here. And these parts, these are ones that you want to make sure that the numbers are all, you want to go through the different formulas, make sure everything is lining up the way that this is intended to be. And you'll want to double check these, obviously, is just a summary of everything that you put in there. All of the line items giving you a summary of what's over here. You got your gross revenue, your gross profit, total expenses without the add backs, total expenses with add backs, less any construction costs that you might have in there, total expenses with the add backs. You're going to look at just the employee wages and taxes, because it's really good. I've got a ratio down here that's like employee wage as a part of the total expense. So you can kind of get a feel for how much you're spending there on just payroll, and that's going to be your biggest expense. So you want to make sure you're aware of that. Your net ordinary income before the add backs, your EBITDARM and then your EBITDAR, and kind of do those. And then you've got a few ratios in here. So net profit margin, you've got your operating expense ratio, your employee wage, total expense ratio, and then the employee wages gross profit ratio. So those are just a few ways that you can look at it. Gets in here to the past financials, really helps you dig into that and better understand exactly what you're looking at here on a line-by-line basis. Again, though, I'm going to encourage you to make sure that all the formulas, after you enter your information, make sure you are validating the information. As confident as I am in the calculator, there are likely going to be some issues with it, and you want to make sure that you are always validating your data and double checking things and making sure that everything works the way that it needs to work. Okay. Jump over here now to the expenses. So what I do on this one is I actually take what I put in the past financials, so these expenses, and the ones that are not add backs, I will throw into this expenses tab, just so I have it there in one spot, and then I'll add in a few things that they probably don't have that I want to include, or I'll start making adjustments off of it. So I just kind of put a straight number in there. Some of these are going to be things that they put in, they give you a yearly amount, and I want to know what the monthly amount is. So I have this adjustment factor here, and it's basically, if I have the monthly amount, the yearly amount is going to be the monthly amount multiplied by that adjustment factor. And then if I am given the yearly amount, I'm going to take the monthly, I'm going to take that annual amount and divide it by that adjustment factor. So I can get a monthly and an annual amount. In my mind, it helps out a lot to do that. These are like this repairs and maintenance is one that I always put in, that they typically aren't going to have. And so I just put like a 3% kind of buffer there, and that's going to be reserves that are there for repairs and maintenance. For example, they might give you a food line item, and so you can look at that, or you could look at just kind of what the average food costs are per resident per day. And so right here, I've got in here $8, and so this one is basically looking at it's pulling in things from the projected financials calculator, which is over here. And that number is actually how many residents there are. And then I'm multiplying that by cell C18, so that $8. And then I'm multiplying that by 365 days, so per year. So this is, say I've got 60 residents in there, $8 a day, 365 days in a year. I'm going to be spending about 146 grand on just food costs. Okay. This right here is the percent of the total expense. So this is just a formula that's letting me say this expense amount right here, this 211,000 divided by the sum of all of these expenses, just so I can get a feel for how much I'm spending on each of these different line items. Okay. So it just kind of lets me see, I'm going to be spending about 35% of all of my expenses are going to be on wages, another 25% on food. I'm going to be spending 12.5% on management. Everything else in here, though, is really low, right? And I would kind of expect to see that your taxes might be high, your insurance might be high, and then utilities, but everything else is going to be relatively low when you're looking at things. That's just a good way to look at it. And then if you need to make larger kind of capital expenditure type improvements, I've created a spot where you can kind of track those in here. And then these are formulas that just grab total amounts from each of these two separate tables, and then they feed into the yearly pro forma for you to look at, and it kind of is going to help you get out and really start kind of looking at some of those numbers and how you can do that. All right, guys, so I was planning on having this be just a two-part series, but as I get into the numbers and really start diving into the calculator, I realized that it's going to end up being a few more videos than that. So we're going to chop this one off right here. That was part 2 of the calculator tutorial video. We'll get into the pro forma and other things in our next video. And just make sure you are commenting down below. If you're seeing things that need to be improved on the calculator, let me know so I can improve the template for people, but also make sure that you are adjusting those things on your own end. So you're not losing any of the work and you're not losing anything as you're working through, and you're not missing anything as you're trying to underwrite your own property and your own opportunity that you're looking at. Make sure that you are liking the videos. Give it a big thumbs up. Make sure you ring that bell so you get notified next time I drop a video. And follow me on TikTok to make sure that you're getting those quick videos and just having something like always there so that you can learn something on the go while you're just kind of playing around on your phone. Join the conversation on Facebook. Join me on Twitter and Instagram for more information and just to make sure you're notified when something drops. I look forward to seeing you on the next video. We'll continue the tutorial. We'll keep going through the calculator. And yeah, I'm happy you're here. Happy to see you here on Assisted Living Investing. And I can't wait to see you next time. Make sure you have a good day, and I'll talk to you later. Have a good one. We'll see ya.